Hello and welcome to BQ Prime. I'm Hiral Dadia. We are joined by Prashant Pitti, co-founder at EaseMyTrip. Welcome to the show, Prashant, and congratulations for the set of numbers that we've seen in the second quarter. And this is despite a seasonally weak quarter. If you could just help us understand what has led to this kind of a growth.
Well, thank you, Hiral, for having me on the show. You're absolutely right. Quarter two usually is a weaker quarter compared to quarter one or quarter three. Quarter one, we usually have summer vacations, and quarter three is festival, winter vacations time. So usually quarter two is weaker. However, at EaseMyTrip, since we are a growing company, we have grown all this way, bootstrap, never raising any capital. So it's a constantly growing company, and because of which we have seen a very strong quarter. Our quarter-on-quarter growth has been more than 20% in terms of total GBR. And year-on-year, I believe it's more than 90% as the growth which has come for the company. The primary reasons for the growth is, of course, as you would know that EaseMyTrip is a very price-sensitive company, which is a very customer-focused approach. We keep very customer-focused approach by providing various means to consumers, like charging them no convenience fees, giving them full medical refund on any full refund on any medical emergencies. And also among all the other OTAs which exist in India, we are the only ones which run our own call center. Because of these customer-centric approaches, and because we keep a very frugal and very efficient organization, we have been able to grow this company profitably. In the last particular quarter itself, we took some branding exercises. For example, we basically co-sponsored the Asia Cup, which was viewed by more than 49 crore people all across India. So it got tremendous amount of viewership. We were the co-sponsors, and we were seen everywhere in the Asia Cup. Plus, we also sponsored the Road Safety Cricket Series in the last quarter itself. Now, because of these two particular marketing initiatives, our company spent slightly more on marketing side than what we usually do, and because of which the GMV increased by almost 20-25%. When we compare quarter on quarter, but the profitability only changed by 4 or 5%. Now that happened primarily because of the marketing initiative, which was one-off event for the company.
Right. So overall, as you brought this up in terms of the marketing and sales promotion initiative that we had taken up, I think it was almost 1.5% of the gross bookings versus a 0.6% that we've seen historically, at least in the first quarter. Now,
Correct.
Even if we adjust for the spends, the margins come in at around, say, 45 to 46%, which is still down on a sequential basis. So any reason for that?
No, I would not think that the margins would come down if you do not remove this 13 crores additional as expense. Then if you look on quarter on quarter basis, it will pretty much look the same. The margins would look the same. For the last 3 quarters, the margins have stabilized. Of course, if you compare year on year, the margins are slightly reduced. But if you compare quarter on quarter for the last 3 quarters, it is pretty much the same.
Right. So are we expecting the margins to see a bounce back to what we've already seen in previous quarters?
In fact, if you look at it, the gross margins has only gone up by a bit since in this particular quarter. Our adjusted revenue, I would believe, was about 7.9% for the last quarter. And for this particular quarter, it is somewhere around 8.6%. So overall margins have gone up, gross margins have gone up. But because, we did branding activities in such large scale for the first time, that is why you're seeing that the profitability did not increase by as much. However, the kind of branding exercise which has taken place, we could have easily amortized it for over the period of 5 years, but we chose to amortize it in this particular quarter itself.
Right. So overall, if I see the entire setup right now, Prashant, it clearly seems that the strategy is going to be to chase growth versus only maintaining margins. Probably will not see a major up move coming in there. So is that the strategy? Would you confirm that?
No, that is not correct. At EaseMyTrip, we have to balance a very thin line, very fine line between being profitable and also growing as a company. Now, profitability surmounts for us. And that is why even this particular quarter was profitable. Profitability did not increase as much as the business increased. That point is well taken. However, we are still profitable. In fact, if you see among the all other listed players in India, we are the only ones which are consistently profitable. In fact, we are the only one which is bootstrapped and profitable among all listed players. So we do wish to continue grow our company profitably, but we have to balance that thin line. And also another thing is that I think that this is actually a right time to grow the company, since most of our competitors have taken slightly backseat because they all are loss making, and then many of them aren't able to raise funds. We believe that this is actually a right time to play with the forefront and take some marketing initiatives, especially as since they are coming at very discounted prices right now.
Right. So what would the cash on books be currently?
I think we have cash reserves of about 240 odd crores, 230 or 40 odd crores in the bank, in the books right now.
Okay. And is it that this is going to be spent more towards customer acquisition and marketing?
No, not necessarily. See, as I said before, that even after doing such heavy lifted marketing, the company is still profitable. We believe to do a transaction at profitable level, which we have done for the last 14 years, and that would continue to happen. At EaseMyTrip, we have three big things which we are looking for in the next 6 months. First is basically to continue to grow our market share in India for air, hotel, holidays, everything. The second is basically to increase our international footprint. As you might be aware, that EaseMyTrip, we have opened up offices in Dubai, London, Singapore, Thailand, all these places. And I'll give you some scenario related to Dubai business. In Dubai, we started business only about 6 months ago. In the first quarter, we did business of about 7 crores. But in the last quarter, we did business of 24
crores. Correct.
So the business is growing pretty well in Middle East region, and we look forward to grow our businesses in other parts of the world. The reason remains the same, which is that we will continue to run our operations and technology based out of India. And hence our cost structures are going to be by far better compared to the incumbent players which are existing over there. And because of which we will not charge consumers convenience fees or service fees, which incumbent players are charging, and yet be profitable. With this thought process, we are going to grow the company not just for Indian user base, but for people living in Middle East, people living in Europe, and people living in Southeast Asian countries. And that's the endeavor number 2. And the endeavor number 3 is that EaseMyTrip, we are looking forward to acquire travel-related companies which are growing profitably, which are asset-light business growing profitably. At EaseMyTrip, we have already done 2 acquisitions, and in this particular year itself, which is financial year of 23, we are looking forward to acquire 2 or 3 more such companies.
Right. So that's an interesting point that you've made as well with regards to acquisition in FY23. So again, would this be through internal accruals, or would it be a combination of internal accruals as well as debt? Because I know you haven't raised any money, but how are you looking to fund the acquisitions? And what's the kind of ticket size that you're looking at?
At EaseMyTrip, we are very adverse to debt. We have never taken any debt in the company. It's a zero debt company, asset light company. We believe we will continue to grow the company without debt. There are certain internal accruals, as I mentioned, which is already available at the company. And plus, we also have equity, which could be used to exchange to acquire companies. So we will look at the tools depending on the ticket size, something which I cannot comment upon right now. But the idea is to basically find another disruptive company like EaseMyTrip, but mostly in non-air space. See, airspace, EaseMyTrip feels extremely comfortable, and we are growing astronomically in hotel space, bus space, holiday space, cab space. We are looking to acquire companies which are growing leaps and bounds, but are growing profitably. And believe you me, post-COVID, there are some companies like that. So what has happened is, because of COVID, many of these companies had competition who died during the COVID times. And then these companies had to transform themselves and become profitable. So, there are few profitable consumer-driven technology companies in travel space which exist right now, and we're looking forward to acquire them.
Right. And overall, apart from that, you mentioned about the kind of growth that we've seen. The momentum also seems pretty strong, from a 7 crore to almost a 27 crore. It's almost 3 to 4 times kind of a growth. Are we expected to maintain a similar momentum from here on for Dubai operations as well?
We have very strong and high hopes from any business which is coming out of India. The reason is very simple. See, in India, we are competing against people who are charging between 300 to 500 rupees per passenger as convenience fees. In Middle East, the incumbent players are charging anywhere between 1,000 to 2,000 rupees per passenger as convenience fees. Same goes for Europe. Same goes for US. Now, imagine the kind of cost arbitrage which we have if we continue to run our operations out of India, but provide these travel services using online as a medium to people living in developed nations, like the countries which I have mentioned. And hence, because of this, we will be able to offer much better pricing to consumers living in Middle East, Europe, or US. And with that thought process, we are sowing the seeds for the future and looking forward to continue the momentum of the growth.
Right. And Prashant, currently, what is the customer acquisition cost? Because I think as a percentage of GBR, it's gone up slightly. So at what levels do we expect it to stabilize?
See, the customer acquisition cost went up primarily because of the branding exercise which has happened recently. I do not anticipate that number to continue. I anticipate whatever earlier number was, maybe a slightly higher version than that is what will continue for the next couple of quarters.
Right. And between the different segments of business, as you mentioned, air segment is doing absolutely fantastic for the company. You are looking to grow in the hotel segment as well. So as a percentage of revenues, how do you see that breakup panning out, say, in the next 2 to 3 years?
See, at the time of listing, 97% of our business was air business and 3% was everything else put together, which was hotel, bus, train, cabs, holidays. Now that number is somewhere around 90-10. 90% is basically air and 10% is everything. So in the last 1.5 years itself, we have been able to change this number, and we have been able to change this number while doing it profitably. See, none of our line items are loss making. We are not doing any hotel business at loss, no bus businesses at loss. We are not funding for the growth of one business via the other business. So all of our line items are profitable, and that's the intent of the company. In the next 2 to 3 years time, using organic and inorganic channel, we look forward to become 60-40, 60 being air and 40 being non-air.
Right. And my last question coming to you, Prashant, is, the reason, the kind of market share that we have right now, specifically in the airline segment, which is the largest, what is the reason for the better pricing that we get? Is it the kind of volumes that we command? Is that one of the reasons why we get these kind of prices from the airline companies as well, which probably a seasoned player has not been getting, and they do charge additional pluses to the consumer?
So I believe that our margins will be slightly on the gross margins would slightly only be on the lower side since we don't charge convenience fees. The answer of EaseMyTrip success is not that we make more money as a gross margin. The answer of our success is that we do not spend as much, neither on marketing, nor on discounts, nor on employee expenses. We automate a lot of things. And then there are multiple reasons because of business related reasons, because of which we don't have to have that much of staff as vis-a-vis, which is compared to our competitors. And also by the nature of being bootstrap company, we have learned to get more from the limited capacities and capabilities which we have. And efficiency basically is a culture of the company, and it becomes extremely hard to change with the due course of time.
Absolutely. I mean, the operational efficiency that you guys have been able to achieve, that's something which is playing out, and that's the benefits that you're reaping as well right now.
And that is the benefit which we will reap internationally. Why should we just be the ticketing company of India if we can be a ticketing company of the world? Because of operational efficiency. See, it's a commodity business, and in commodity business, all you have to do is manage your expenses very well and then offer better price to the consumers. And if you're able to offer better price to consumers for a long duration of time, then you don't have to market. People will come to you. This is the basic principle which we are following in whatever we do.
Right. And lastly, in terms of market share gains, what's the vision? How much are we trying to achieve from here on?
We want to be the number one travel company in India. We're the second largest right now. We want to be the number one travel company in India in the next 3 to 4 years time.
Absolutely. And good luck for that as well. Thank you, Prashant. Thank you so much for speaking to us at BQ Prime, and a good up move that we are seeing as well with regards to the kind of business you're seeing, and looking forward to announcements with regards to the acquisitions that you will be making soon.
Thank you.
Thank you.